Hello traders, let's take a look at a few charts. As you probably noticed, the markets are not really moving too much, so it becomes more important to be picky with the markets you like to trade, especially if you're a trend following traders like I am. Like say something like the euro versus the USD, there's not a lot of activity there, so that's actually something I haven't traded for a very long period of time, and I don't think I'm going to be trading anytime soon given the way things are looking. But there are other markets where you do see some trends, and we're going to show you a few charts here that could potentially be important for what's going to happen in these markets over the next few weeks and months. And more importantly, these are some few charts where there's actually some sort of pattern. In something like the euro dollar, it's very difficult to say if we're going to be up or down, and given the way the volatility is contracting, again, it's very difficult to do anything with that. So let's take a look at a few charts, and we're going to begin with sort of what is the clearest pattern to me at least, and that is the Aussie dollar versus the USD. And as well, I didn't mention this, but we're going to take a look at weekly charts to get that long-term view. We could, of course, find pairs in smaller charts like the daily and the 4-hour, but what we're looking for here is those big moves that people are going to be talking about by the end of the year. So Aussie dollar versus the USD is something I touched upon many times here at Front Row, and the idea here is that we're trading within this massive descending triangle. Obviously, the price itself is being weighed down by trade wars and domestic problems in Australia, so that's supporting the outlook here. In either case, we're dealing with a big descending triangle, and we had already a break last week, but it's first this week where we can see a nice continuation on that move. Now we're still relatively close to the breakout point, which is 70.04, and I'm guessing that as long as we trade below the high from May 6th, so that will be 70.48, now this market's going to go lower. In fact, I think as long as we trade below this week's high, we should most likely be trading lower. So we're still looking here and potentially could have a nice additional decline here of about 200 pips, and obviously if we get a correction it can be a bit more, and also providing an even better risk reward ratio. Now this is something that a lot of people don't trade, but it's still very interesting, and we need to be clever here as well, by the way guys. A lot of people just trade their simple vanilla stuff like euro dollar, and yeah, okay, if you can make money on that market in these conditions, then that's good, but if you can't and you sort of find it just boring and struggling, then it's always good to take a look at some more exotic pairs. And here's one. Here's the new Swedish kroner versus the euro, and this is going upwards, which means that the Swedish kroner is just weakening. You can see here we're trading with this big rectangle pattern, and the market traded higher here and had a official breakout in the last week of April. The market is now correcting, and we might potentially revisit last week's low, but I'm guessing as long as you trade above the breakout candles and the low at 1063, that this market could potentially head up higher, and the whole move according to the pattern here should be a move of about 4.5%, which is not that bad. Another pair to keep an eye on, which I think can become more relevant, especially if stock markets indeed trade much lower, is the Canadian dollar versus the Japanese yen. You can clearly see here how we have a massive head and shoulders, alternatively a descending triangle. So you can treat this as a head, left, right shoulder, and then a break or a close to ATFX could potentially lead to a decline down to the flash crash low. But if we sort of measure and treat this like, actually if we do take the whole the section here really, so we treat this like a descending triangle, we still gets a massive decline really of 865 pip. I could take the target from the head and shoulders from here to here, and that's going to give it an even more aggressive pattern, or target really, but I don't think it's reasonable really to assume that we're going to decline so much. And we could decline that much, but it's more likely that on the way towards that target, the price could morph into something different. So that's why I'm just grabbing something like this, which is the the target based on treating this little section here like a descending triangle. And if that's the case, then you still have a decent 865 pip move. So this is something to keep an eye on, and what we're looking for here is a weekly close below 80.58. Now there are other markets as well. It's quite clear actually on something like the daily or the weekly chart, which is the GBP USD, and this is, you have a head here, left shoulder here, and then a right shoulder here. And if you look at this from a daily chart, you can see it slightly better. And you can see that the market sort of breached below support and the trend line. And really what this is suggesting, at least on the daily, is that as long as you trade below yesterday's high of 129.20, now this market could potentially continue to trade down lower. So this is something to pay attention to as well. Biggest challenge with this though is that if you just look to your left, there's a lot of different levels here to pay attention to. You got the low here from 24.75, and then you have this level up here, which is 132.84. So all of this is sort of a bit of a big mess, and it's quite difficult to say what's gonna happen next here in the short term. So I wouldn't pay too much attention to this, but it is clearly a bearish market. And I'm going to show you a final chart here, which has shown over the last few years, which I think makes perfect sense given the way Brexit could hit the economy. And that is that seen from a multi-year perspective. So if you look at prices from 1995, then you have a massive head here in 2007, and then you have a massive left shoulder and a massive right shoulder. And then you have that break to the downside for the head and shoulders, a very hard retest. Well, we're pretty much heading lower here, and it does suggest to me that this pattern, massive head and shoulders pattern, still suggests a massive decline, which really goes in hand with the way the economy is developing, unfortunately. See, unfortunately, because I'm myself based in the UK, but yeah, it does suggest a significant decline of about 55%. But obviously, that's multi-year sort of outlook, but it's still something that seems to be having exert some sort of control over price action. In the short term, again, is that daily head and shoulders pattern, the fact that it doesn't seem that we're going to have some sort of a deal just yet, that is sort of influence things in a negative way. Okay guys, this concludes today's market update. As always, don't forget to subscribe to our market updates. It's very straightforward. Just sign up to a YouTube account and then you subscribe. As well, there's a little bell button to the right. If you click on that, you get notifications via email that a new video has been uploaded. You can of course also control all of this within the controls of YouTube. Thanks so much for watching, and don't forget to share. Thank you.